Hello everybody and welcome to our accounting quick hit video on the topic of adjusting entries, specifically the deferred expense or reclassification entry. As an overview for adjusting entries in general, we are going to adjust the accounts at the end of the accounting period prior to issuing the financial statements, and the goal of all these adjusting entries is to ensure we have the proper balances for all of the income statement or revenue and expense accounts and all of the balance sheet accounts like assets, liabilities, and equity. Now, as we've discussed in previous videos, the goal of these adjusting entries is to correct for any timing differences that have occurred because of the difference between the accrual and the cash basis of accounting. The ones we're talking about today, however, are the reclassifications or deferrals. The revenue or expense recognition under the accrual basis of accounting occurs after the cash receipt or payment. So the initial entry here is going to be a cash entry, and then later on in the subsequent entry, we're going to have the actual adjusting entry to reflect the revenue or expense. So for all four of our different types of adjusting entries, we have a few rules we need to be aware of. First, you always have to have at least one revenue or expense account, and you always have to have at least one asset or liability account. So one income statement account and one balance sheet account, but cash will never be in that adjusting entry. It's going to be in a later or earlier entry, but not in the adjusting entry itself. So let's take a look at an example, a few examples of the deferred expense. So let's take a look at rent. The company has prepaid 1 year of rent in December of a particular year, $12,000 or $1,000 per month. The first entry, it involves cash, so it's not an adjusting entry. It's just the normal cash transaction. We debit the prepaid rent asset to increase that by $12,000. We haven't used it yet, and we credit cash for $12,000 to reflect the fact that we paid cash. At the end of the period, in this case December, we need to record the adjusting entry to reflect the recognition of that rent expense. The $1,000 per month times just 1 month gives us $1,000. The journal entry has to be a debit to rent expense and a credit to the asset prepaid rent because we've used it up. Now down the road next year, in year 2, we have the other 11 months to record, and it's the same journal entry. Debit to rent expense, credit to prepaid rent for the remaining 11 months. Now let's take a look at the supplies. Similar thing happens here. We've purchased $5,000 of supplies with cash, and at the end of the period we only have $3,500 left. Therefore, we must have used $1,500 of them up. The first entry involving cash is not an adjusting entry. We debit the supplies asset for $5,000, credit cash for $5,000 because we've paid cash. At the end of the period, for that $1,500 that we used, we have to debit the supplies expense to show that we've used it, and credit supplies the asset to reduce it because it's no longer there. Now, one other common situation that is a prepaid expense, a much longer term prepaid expense, is when we buy an asset for $500,000 in this case in the first year. It's going to be used for 10 years and it'll be depreciated $50,000 per year. We need to record the entry first to reflect the purchase of that asset. We're debiting that asset for $500,000, crediting cash for $500,000. But then the adjusting journal entry for these longer term expenses is a little bit different. We're still debiting depreciation expense for $50,000 for 1 year, but the credit does not go to the asset directly. It goes to what's known as a contra asset, and we cover this more in our actual depreciation video, but the contra asset here is known as accumulated depreciation. This offsets the value of the asset on the balance sheet to basically reflect the fact that we've used it up. So on the balance sheet, we're going to see that fixed asset at its full cost minus the accumulated depreciation of $50,000 gives us the net book value of the fixed asset, $450,000. Again, we cover this more in detail in a later video. I hope this has helped to clarify this one type of adjusting entry. We have 3 others we'll cover in later videos. I thank you for your time and look forward to talking to you in those other videos.